Hello to all the Web3 enthusiasts out there. This is Max speaking, and welcome to the new episode of Synopsis. Today I'm hosting this one with Brian Mehler, the CEO of Stable. Hi, Brian. How are you today?
Great, Max. Thanks for having me.
Yeah, always a pleasure to see new guests here. And we have a bunch of questions prepared. So if you don't mind, let's get straight to the action.
Definitely.
To begin with, since it's the first time here at Synopsis, could you please go ahead with a brief introduction about your background and your role in Stable?
Definitely. As you said, I'm the CEO of Stable. Stable's a layer one blockchain that's focusing on payment rails. So with that, we use USDT as our native gas token. So it allows you to pay the gas fees for any transaction in the currency that you're most likely already corresponding with the payments. For that idea is, USDT is 70% of the stablecoin market, and we figured why not make it easier to move money around instead of getting stuck in a catch-22 with having USDT but no ETH in your wallet and you can't move your money. So instead, just like you would with a normal bank account, use the same fee in currency that you're moving the money with to pay those fees. And with that, we're working on how to change the financial rails that all the money's moving on and helping it move faster, more efficiently, and less expensive.
Wow, sounds awesome. And we have a pretty good context now. And let's continue with the biggest announcement so far, I would say. So Stable has just announced its mainnet launch with a lot of buzz and excitement around the launch. Can you give me some more details around what mainnet is bringing for Stable users, as well as some additional details around the Stable Foundation and its native token?
Definitely. So for the past over a year, our team's been working on building out the protocol that would become the stable mainnet, and we're excited that that went live in public yesterday. With that, we had an overwhelming support in terms of our day one partners. That's where we had leaders in the space, whether it's just a few minutes ago, Morpho put out their announcement. We have things like Obit and Orbit. You name it, we probably have it built into our chain, and that's really a testament to like what we're building, where there's all these DeFi products or money remittance companies that are trying to find a way to make it less painful and a more efficient manner of moving money. And so, we kind of spent the past year working with these teams, and we saw their excitement, which matched our enthusiasmness for what we were building. And I think it was a great marriage of like great products who are already building out there, but they were dissatisfied with the current rails they're using or the current networks that they were operating on, and now they're able to find that better product fit for what they're building for their end users. So, our go live last night was really exciting, and money's already starting to move, and the transfers are taking place. So that was really a testament to the past year and a half of the work on this. So with that, you mentioned the foundation. So that foundation is really focused on how to develop this network, how to continue to grow the ecosystem. With that, there's other future partners that aren't on the network just yet, or there may be things in the traditional space that haven't embraced crypto. So the foundation is really focused on how to do that reach out, how to do those communications, and how to continue to bring money on chain and not just on chain, but also onto Stable's mainnet. So we feel that the stable chain that we built is really going to be that destination for whether it's USDT or you want to talk a little bit more about some of our backers. We have a investment from PayPal Ventures, and that we're supporting PYUSD, their native currency. So with all that, we kind of see there is a convergence of people wanting a better system for moving that money. And we feel that we've really delivered with that with the mainnet going live last night. And in terms of the governance token, that's a token that's called Stable, STABLE, and that is what's used for staking and for the validators. And so that's a traditional governance token. However, it's not used for gas payments.
Wow, sounds awesome and pretty detailed. Thank you. We see that we have an experienced spokesperson here, so let's continue this way. So the next question is that the project has received some rather impressive backing, including from organizations like Bitfinex and other notable partnerships like PayPal. What do you believe drives the confidence these organizations have in Stable?
I think it's kind of building on what I just said. there's a lot of interest in how to make, whether it's USDT or another coin, PYUSD, just move more efficiently. And I think, we're focused on developing that velocity of money. Right now, right now, if you're using a traditional means of a layer one, you can only settle every, let's say, 7 minutes or 15 minutes if there's a lot of congestion, or you're paying more to get that faster settlement times. So, 8 times an hour versus with our network, you can get that up to with our sub-second finality, 60 times in a minute, and scales from there per hour. So what we're focused on is getting the money in and out as quickly as possible without those burdensome fees and network congestions. In terms of like the backers you mentioned, Bitfinex is great to have on our cap table, as well as PayPal Ventures. In addition to that, we have like some other great partners. Franklin Templeton, for example, they're building their product with Benji, and we're helping to like work with them in the future and develop that out. So I would say our network of who came to support Stable from day one is a really amazing team, and we're really excited to keep building with them. And we have a few more things that we haven't just quite launched yet, but we kind of waited for this mainnet to launch, and we've rolled out a lot in the past, I would say, week, and then there's just more to that to come. But I would say there's a lot of excitement in the space. I know personally from working with the chain over the past week in a very detailed manner, there's a lot of efficiencies that are there. And I think just people using traditional chains or existing layer ones, trying it out on our network is lightning fast, and it's kind of how you expected it to be. And I think that's the real change that we're delivering.
Well, sounds really confident, and well, a lot of big things you mentioned, and so many big things are happening right now. Let's speak a little bit more about them. Another notable announcements I've seen so far. So you recently announced that you would partner with an Anchorage Digital as the trusted custodian for the network. How does Stable look at the partnerships with institutions and banks to expand use cases for stablecoins?
Yeah, I'd say it's the core of our mission. So having a partner like Anchorage Digital is paramount to like our success. I would say, the team that Nathan's built at Anchorage is top of the line. We get to work with like a great team members, whether it's Sergio in their stablecoin space, and that whole team. They're working on really changing the way that stablecoins are not just stored and kept safe, which is at the core of Anchorage's business, but also like how can they move faster and safer and better. And we feel like that's the perfect alignment, because if we're going to get people to trust our network and have it safe, and it's going to be that level of custody that's necessary, we want to have the best partners in place. And one of those is Anchorage Digital, that has been with us since not just day one of our mainnet launch, but also the early days of us building this product. So it's been great working with them and collaborating on ideas. But I would say a partnership with institutions, what that really looks like, and the banks, for example, is right now they're evaluating the space. You can look at the industry as a whole, and whether you look at some of the larger American banks where they have their own private networks where they're running stablecoin settlements in terms of like intercompany transfers, like that's a good use test case. But now they need to take the next step and use the public rails, because that's where all the other corresponding is going to be. So we're excited to keep developing those relationships with those banks. And again, as I said, there's a lot of announcements to come out, and that's definitely going to be a focus that you're going to hear about us for the next 6 months to the year.
Well, we'll be keeping an eye on your success and tracking achievements of those milestones. And let's add a little bit more details on how it actually works. Could you please tell us how does stable chain work alongside institutional and traditional finance, and what aspects of the network's design cater to this?
Yeah, I would say, when Stable was being built, that was a key part of our decision. I usually try to focus on like three main pillars. It's obviously the user experience, and it's got to be the developer experience, but it also has to be the intermediaries, which in this case would be the banks or the financial institutions. And they want a product that not only is like low fees for their clients and makes it fast, but they also want something that's like safe and secure. So I would say like we didn't compromise anything to make sure that we built a product that the banks were excited for. Rather, we took their concerns, and we did a lot of listening to make sure that we were integrating things that were necessary, that this was a product that they wanted to use. So obviously blockchain has been, as I said, whether it's the JP Morgan coin, JPM coin or other companies that are launching their own coins, they're accepting the blockchain. It's now the next step is to accept like a public blockchain. And I think that we're really well positioned for that. So with that, and as we're developing out this network, I would say that the design aspects we took in place was obviously, things like speed and security. And then from there, we're working on, next year rolling out. We've announced it in our roadmap is as we've started evaluating and started toying with different privacy features. But that's a key part for banks is obviously that privacy, but also making sure that they're compliant with regulations. So it's a good balancing act that we're doing. And obviously our first focus was get the mainnet launched, and then from there to start rolling out the next phases of our roadmap.
Wow, sounds great. Got it. And can you please explain a little more about how Tether's USDT works in concert with Stable and how this provides benefits to users?
Definitely. I mean, we're really excited that we have Paulo from Tether on as an advisor for our company. So, we do a lot of feedback taken from Paulo and his team about like what the mission for Tether is. So whether it's the global mission for Tether or, when Tether really focuses on building a market fit product, which is such as USAT, working with the team there, like with Bo Hines and his whole team of figuring out how the US is going to be compliant with the Genius Act. I would say what we see Stable being a part of is the rails for that to run on. So if you're using, if you're building on a network that's going to be really focused on getting USDT and Tether's other products to scale and to move faster, it's an easy marriage to have a chain like Stable being that product and being that network for them to run on, because it's really focused on the lack of complications. And as I said, one of those earlier ones is that we took away what was normal in the space of using the governance token as the gas fee, because if it's governance, it's not really a gas fee. You're using it for two different things, and there's the volatility that's part of that. So if you're buying, let's say you're working on the Ethereum network and you're buying a lot of ETH and you're using that for your gas fees. Well, with the volatility in the markets, gas just became that much more expensive. And I think we all agree that we're not fans of fees and we're not really looking to take on more fees. So one of the confusing parts would be, well, why have the fees volatility be one of the effects you have to do when you're transferring money? Because if you buy $100 of a native gas token that you're paying your fees in, and the market drops 20%. Well, now those fees just became even more expensive. So we're looking at kind of removing that with Tether, for example, with USDT. When it's $1, it's always $1. And you're able to use that dollar, whether you're sending to your friends, sending it across borders, but also if you get charged with a fee because you're doing a complicated transaction and it's pennies of cents, then you're able to just pay in that normal fee. So it's the change that you're transferring gets to go pay those gas fees rather than having to hold two balances and deal with volatility. So I would say that's kind of the mission we took from Tether, was really simplifying the way that money moves.
Well, that sounds like a really great contribution for the entire industry, and you're addressing one of the main pain points, I would say, of the community. So that's great. And let's move on to the next thing I wanted to discuss. So obviously, the Genius Act has paved the way for stablecoin integrations in the US. What do you believe is the next major stage or development on the regulatory front as it relates, to stablecoins?
Yeah, it's a topic that I spend a lot of time not only reading about and trying to get more information, but it's also the conversations I have with other projects in the space is really, I think the Genius Act set a very good mandate for other countries the mandate they set for the Genius Act allowed a lot of other countries to open up the opportunities to their own regulations. So I'd say through the reciprocity that exists in the Genius Act, there are actually other countries are, feel more comfortable being able to roll out their own stable coin guidance because they know that interoperability that's going to exist. So I'd say, as money is becoming more and more global, the regulations need to be as global as well. So I would say, in terms of answering your question of what's the next major stage or development in the space, I would say it's going to be some of the countries that have been early adopters of regulations in terms of stablecoins and seeing how quickly they advance. So, some of the big ones are in Asia. So whether it's Korea, Japan, or Singapore or Hong Kong, I think they all are evaluating different aspects of how they're going to regulate stablecoins. And I know that I'm excited to kind of hear how they roll that out and how we can work with them. Japan recently had a stablecoin go live. So I think it's the momentum's building. And again, I think that was all predicated based on the first mover of the Genius Act to really set the stage that you could have a comprehensive and structured product in terms of regulating stablecoins and how they can move and how they can be accepted.
Well, thanks, pretty detailed. And what are some of the other hurdles for integrating stablecoin payments with existing payments infrastructure, and how does Stable overcome this?
Definitely. But I would have to be honest and say there's a lot of hurdles. And we've done a very good job of clearing those hurdles one after another. The hurdles come in because there's a lot of, it's a lot of like a lot of dismotivation that exists where people aren't really looking to make a change because that affects their business model or affects their underlying cost. So with that, if they're able to make money by taking clips or, pulling bips here and there from fees on networks or, they like the congestion because that makes fees higher, it's really hard to change the incentive to focus on the clients. And that's, those are the hurdles that we're tackling. So instead of dealing with a lot of the, I guess you would say like the middle parties of the system, we went right to the source. As I mentioned, like, whether it's working with like Orbit or some of the other larger players in the space, we really focus on like going into who's interacting with those customers and building those rails out. But a lot of it also has to do with like, the banking and global banking. As we talked about the Genius Act, there's not necessarily a comprehensive approach worldwide for how money moves. But that also exists in traditional funds. Transferring money across borders is already, it's very slow, it's very cumbersome, and it's definitely expensive. Whether you're sending a Swift or you're trying to do a domestic wire in the US, the fees are a lot, and it really doesn't cost that much. But at the same time, you don't have any transparency. And so, as regulators are looking to make, adoption to stablecoins, a reality, one of the things there is that it does provide more transparency, and it's also settled in real time. But right now, I'm sure a lot of the listeners today have, had the time where they've had to send, whether it's a Swift payment or, make an IBAN transfer, and they don't really know where it is or what's going on when it's crossing the borders or how much. And I think, kind of talking about hurdles and, going a little bit deeper into it, I would say in the traditional world, when people are sending those wire transfers I mentioned, there's always a confusion when you see corresponding bank and intermediary bank, and no one really knows the difference. There's a very minute difference of how they are and what the structure is. But the fact that the industry has kept the two lines there or two blocks of text there, and no one knows if they're doing it right, is kind of crazy to imagine that everyone's moving money, but really no one knows how it works. So we're hoping to satisfy us to change that and to satisfy the wants and the needs of the clients, where it's a single address, you punch it in, you type it, and it's delivered. And I think that's what's going to be changing the way that money moves.
Wow. Awesome. Thanks for sharing. Sounds like a lot of information, but you successfully managed to put it all in order.
Hope it's
And,
not
and now it's my time to drop a lot of information. So the next question is going to be huge, but I believe you will deal with it. So during the Digital Asset Leadership Forum in South Korea, your colleague Sam said, stablecoins must be able to actually move within the financial ecosystem. Only after that can assets that hold value like gold or commodities be added to the ecosystem. Once most assets are tokenized, a significant portion of economic activity will take place in on-chain on digital assets. Well, the question is, from a regulatory standpoint, what else needs to occur in markets like South Korea or even in the US to enable what Sam is talking about here?
definitely. To building on what Sam said about the ecosystem and finance and how it moves, I would say one of the key points there is the banks. Obviously, if that's going to be the front end line and where money's currently stored, if we can't get that money on chain, then that's a disruption to our model. Obviously, there's providers out there that enable the ability to, but obviously there's every time you have another step, it's a little bit more complicated, and there's other bits that you have to integrate and have to slow it down. So we're looking to find a way to like really find a method of going to the source and getting that currency converted and on chain. So going back to Anchorage and their role is really finding a way to mint tokens on chain and have that money kept safe and stored. And as Sam was saying, dealing with things like the gold or commodities on chain, again, you need to have the financial access, whether you're on ramping or off ramping that currency on chain, because people still need to pay the bills or transfers need to happen outside of the network for right now. And as the network advances and adopts, that need becomes less and less. I would really parry that to, decades ago, the US, for example, was heavily reliant on paper checks and the slow process that required. And we saw the advancement of it. Checks went from, no, not hitting your bank account until it was deposited 3 or 4 days later and cleared to, as checks advanced before they were phased out, was that the check would hit and you would get a nominal amount deposited to your account as like a pre-authorization when you deposit a check. And then obviously they moved to mobile deposits. You didn't have to bring the checks in anymore. But we see that there's digitalization. So we don't believe that the banks are afraid to digitize. Rather, they want to make sure that they're perfectly comfortable and the regulatory provisions are in place. So whether that's in the US or South Korea, they really want to know that the money that's on chain is safe and secure, because right now, your money is already digital in the sense in the bank's aspect, but that's not publicly available to you and you have to go to the banks to get access. We're looking to make that remove some of those hurdles and allow people to have their money in their own custody and move it a lot faster.
Wow, as expected, deal perfectly with it. So thanks for sharing. Really, one of the most interesting parts, I would say. And we're moving on to the next block of expectations and announcements. I would say the pre-final stage of today's podcast. So the first question would be: what is the most important aspect of designing stablecoin networks or stable chains from your personal perspective?
Sure. My interest is always like making things easier, better, and faster. There shouldn't be all the complications in how money moves. If money started off with like bartering with like different aspects, whether it was gold or silver coins, it was pretty straightforward. Obviously, there wasn't a lot of trust there. Was the gold real? Was the silver weighted down with other things? A few times a day, and obviously on our all hands calls, we spend a lot of time in how we're devising a network that's going to be adopted and it's going to be used by a wide audience. One of the things that we always look at is that money is already digital, but now it's not the digital that's working for the customer. Right now, banks aren't 24 hours a day, but our lives and things we need to pay for aren't necessarily, within the boundaries of 9 to 5, Monday through Friday, excluding holidays. So if you need to make a payment, you need to make a payment right then and there. If that's what you need to do, you should be able to do it. Obviously, there's alternatives such as, whether it's PayPal or Venmo, you're able to move money, but there's limits there. That's where government has limited the amount of money that can be moved, peer-to-peer online. And obviously, you want to make sure that the money's safe and secure. And if you're not always available across borders, and that's one of the limits, as we talked about earlier, with the regulations, is that you can't always move it across borders. And we want to help make that a thing of the past. And with able to move stablecoins, if it's your money, you should be able to move it to who you want, when you want, and how you want, and without getting bogged down with fees or network delays. And so that was one of the key parts we took into our designing the stable chain, was how do we make sure that we're putting customers first. And so again, we remove that volatile gas token. You just pay with whatever currency you're paying. You pay with USDT, which you'd be transferring to your friends. Also on our chain, we make sure that we know that people have other tokens in mind. As I mentioned, through the investment through PayPal Ventures, we have PYUSD on chain, and we have a number of other tokens available that are all EVM compatible. So those ERC20 tokens are able to be transferred over to our chain. That's through a great partner we have with Layer 0 and through the Stargate platform. And so those native tokens that exist elsewhere are able to be brought on our chain and work just like they would anywhere else without even knowing that there's a difference. But that helps with our focus on just like making money move faster.
Got it. Nothing actually to add here. Sounds great. And we're moving to the pre-final question we have for today. Of course, it's going to be about announcements, maybe some teasers. Could you please tell us what should we look forward to now since the mainnet is live, and what does the team have on the horizon for 2026?
Yeah, I think 2026, obviously we're wrapping up 2026 is definitely going to be a big year for us. We're wrapping up 2025, hitting all of our milestones for the year, launching our mainnet, as you said. So, we really figured we got everything out the door that we wanted to for this year. And I know from like pretty deep in the roadmap of what's coming in 2026. But some of those key ones is obviously we're building out our own mobile app that allows for payments for peer-to-peer, and that's going to be something that really doesn't exist on the market right now in terms of the ease of use and the usability in terms of people using it across borders and also the integrations we're building into. So right now, let's say you're not a holder of USDT, but you want to be able to send, and you're in the US and you want to send someone, your friend who's traveling in South America, send the money quickly. Well, instead of going to some of the traditional players and paying the fees or trying to figure out how to do a bank transfer, but they don't have a bank there, instead, you both have the mobile app. You're able to on-ramp that money. You're able to send it to that individual through USDT on-chain, no complications with gas fees, and they'll receive that money nearly instantaneously because it's sub-second finality, and that money's already in their account and ready to go. And through the partners we built globally, you're able to get that money, dispersed, paid with a credit card that is built into the network, and all those things are instantaneous. And so it's removing that friction. I think what we're really looking to change in our roadmap for 2026 is putting it in people's hands. So right now you can use the mainnet and you can use any of the wallets you want to use right now to move and transfer money. Happy to join you after this call and show you how to send USDT back and forth real quickly. And it's easy. You already have your Ethereum address through that EVM compatibility, same address, just different network, and show you how quickly that runs. And from there, that roadmap of 2026 is really just increasing that velocity that we're working for and how money's moving. But excited for it. I think like if you're passionate about the space, if you're interested in payments, or you have a frustration in payments, I think that's a really good time to like look at what we're doing and also try it out. There's no harm. Our fees are extremely low, as we said, and with that mobile app, it makes it super simple. And part of that simplicity of our mobile app that we're rolling out called StablePay is going to be all the complications that exist traditionally in using, whether any blockchain product is, remembering your address and double checking whether or not you have the right address. Instead, we've abstracted it all out. So instead, you just send it to your friend's name, just like you would if you're sending them a message on Instagram. You just know their handle, you send it to them, you can see their information, and it makes it safe and secure that way.
Wow, awesome. And we see that 2026 is really gonna be a big year. So I'd like to inspire all our viewers to follow Brian, follow Stable on all socials, not to miss these big things, and stay up to date. Also follow Synopsis, not to miss the hottest podcasts coming out, and yeah, also staying up to date. And that was a pretty, I would say, insightful discussion. Thank you very much, Brian, for sharing this interesting information. I believe people will watch it even a few times just to not miss some interesting parts. And for the final traditional part, I'd like to ask you to address directly to our audience also with some piece of advice, maybe a call to action, New Year's wishes, whatever you'd like to be to address to people. Please go ahead.
Yeah. Well, I want to say thank you again, Max, for having me. It was great chatting, and really happy to be featured on Synopsis. And I would say to the audience as a whole, I would say make money yours. Use a network that allows you to have full control of your money. But in addition to that, try something new. Right now, we're used to things that are currently available to us, but taking the chance and trying something new that is safe and secure is, I think it's better for everyone. And I think we're excited for it, and hope you can be excited for us as well. And hope to see you guys all, whether it's on another edition of this podcast or on chain or on our app.
Well, sounds great, and like a great ending. Thank you so much. Well, guys, you heard everything. If you have any questions left after this podcast, drop it in the comment section, or maybe reach Brian directly. Hopefully he will reply. And for today, that's it. Subscribe, show your thumbs up to see Brian in more episodes, and yeah, stay safe, guys. See you. Bye bye.
Bye.